Hey, morning all. Welcome back. Welcome back to Morning Cup by 8. Okay, so if you look at the S&P 500, well, it inched up on yesterday or Monday session as the due to the merger excitement. Well, the Merck announced that it is buying a smaller biotech company to boost the cancer drug pipeline, which also lifted some of the healthcare names sector as well in the US market. So I think, however, gains were limited as traders are being careful, right? They don't want to make any bets before the inflation report and also the start of the bank earnings, which could swing the market uh, for this week, right? So I think expect for the market to stay sideways for today, right? Or even in the upcoming session, as investors are in a wait and see mode until the inflation data come out later in the week, right? So looking at our China A50 futures inch up a little bit yesterday by almost 0.3% um, as the December CPI as well as the PPI data signal that the stabilization in the prices coming fear for the deflationary spiral without removing the agency for the stimulus. Well, I think while the blue chip A50 was steady, the real action was in the tech and space sector as well. Well, if you see here, the star index ETF surged by almost 0.77%, and also the China space set hit the 10% limit up yesterday, driven by the news of China filing for more satellite orbital slots, right? So, which also sparked an interest in the commercial aerospace stock. So, for those of you are not sure what Star 50 is, well, basically it's an index that track the science and tech stock to track the performance lah, right? So if I'm not wrong, in Malaysia we have something like MOSTI. So for this A50, well, I expect it to grind higher towards the 15,500 today, or even breach this stubborn resistance level in the coming sessions ahead, right? So yeah, looking at our Malaysia market for today, the KLCI, well, it inch up again on the second straight session on Monday, um, because investors felt, I think, safe again after Friday's US job report came uh, in steady, right? So removing the fears of the sudden recession. So I think, as you all know, market doesn't look into one country alone, which to me, this has sparked a recovery in the tech stock, right? Which also track the Wall Street gains. Like you can see here, um, the TTHP adding a significant gain, about 6% yesterday, JCY, as well as the Smiden, right? Well, also the construction and property stocks saw fresh buyer interest on some of the project awards. So I think for today, right, expect the market to stay positive and test higher, 1,007, right? I think sentiment is improving, but the traders might be careful ahead of the US econs data. So meanwhile, for the uh, FTLI, right, I think we remain positive, trading buyers uh, from the August 2025 last year. We keep our positive trading bias and keeping this bullish momentum remains intact. And we are looking at 1730 together with 1750 after yesterday's session breached above the previous resistance at 1700. So we also higher our our stop loss at 1650 from 1630 following the breakout, right? So, looking at our Malaysia trading stocks for today, well, we have Maxis, a telco company. So, the stock is in its breakout formation at the 3.95 cent level on in a strong volume. So, with that, we expect the momentum to remain bullish, and the stock able to propel or to test higher towards the next resistance at 4.15 ringgit, followed by 4.30 ringgit. So, um if the stock to clear below this 3.75 cent support, this could shift to a bearish structure. Also, next we have Spritzer. So the stock also experiencing a breakout at 2.80 ringgit level, and if the stock to remain bullish, you expect the price to hit at 3 ringgit, second resistance at 3.20 ringgit, together with I mean our expectation together with the high trading volume. So keep an eye at 2.60 ringgit for any attempt of reversal, right? So for FCPO, well, it rose yesterday to close at 40.90 ringgit level on Monday session, as I think traders ignored the MPLB report showing that the December stock to hit higher, and focus on the positive future signals. I think, however, focus on the is on the buy interest that was driven by data showing export surge in the first week, first 10 days of January, and report that Indonesia plans to raise its export levy, which I think would make Malaysia palm oil to look cheaper, right? So yeah, I think if the price able to reach break out or to breach higher following the test yesterday, I think the commodity might test the 41.80 level, right? So for now, we still keep our bearish trading outlook, unless it cross above the stop loss of 180, right? So I think since the Plantation stocks garner attention recently, so would like to highlight the stocks, which is United Plantation, UTD, PLN, right? So now, if you see here, the market is trending higher in tandem with the volume as well. w- uh, Measuring using this Fibonacci projection, I think the stock might travel towards this 36 ringgit if the bullish momentum sustains. However, if the breakout happens, the FIBO is telling us that the 38, 38 and 38.6 level, and also 41 ringgit level should be the next level to watch. Well, not only United Plantation, so this SOP stocks, I think we just published it recently, and the bullish momentum picked up yesterday. Now, if you see, the MACD is crossing higher, right, yesterday, signaling a continuation of the bullish trend. So looking at this bullish Marubozu candlesticks, we do not discount any attempt of correction, but don't worry, right? Because the overall trend is actually bullish. And I think lastly, I think among the Plantation stocks, this is one of the famous stocks as well. Recently, which I also got a question on this, right? So regarding the stocks, if you see here, the pullback is deemed completed after it went up higher above this previous high, and from the projection level, you should see that the next resistance is seen at 20 ringgit 40 cent, 20 ringgit and 60 cent, and also if the next Fibonacci resistance level is at 20 ringgit and 80 cent level, right? So bear in mind, so we got a good stock for you today. Our our Malaysia trading stocks. We have Maxis and also Spritzer, both breakout contest, right? And also a good picks for the plantation sector that we are looking closely, which is the United Plantation, the SOP, and also the KLK. Also, stay tuned and listen to Leng, what she have to say further regarding the plantation sector update, right? So that's all I have for today. Thanks everyone. Happy trading and see you again. So I pass the floor to the next presenter. Thank you.
Thank you, Aiman. Yeah, so today we've got the plantation stats. Yesterday, the plantation stocks did have a nice rally, and I think, most of our top picks there did pretty well. Maybe just let me run through the stats that came out yesterday. As mentioned, the numbers didn't look that great yesterday in terms of the stats, where we saw December production falling 5.5% month on month, and that brought year-to-date December output growth to 4.9% growth year on year. For Indonesia, we saw an even stronger growth, although the numbers that we have for Indonesia is only up to year-to-date October. But year-to-date October, Indonesia's palm oil output grew at 14% year on year. So moving forward, we do expect for both countries to see a moderation on a month-on-month basis, given that we are in the low output season. Exports saw an improvement this month, as we talked about in our report release on Friday. We expected this to happen given that the discount between CPO and soybean oil actually normalized in November, December. So we saw December exports actually rising 8.6% month on month, although it was still down by 1.9% year on year. So year to date, however, the year-to-date December export growth is still down at minus 9.5% year on year. So going forward, exports may see a gradual pickup, in the run up to the festive season, given that we have, the Chinese New Year, the Ramadan Hari Raya in the first quarter, and given that, CPO prices are currently still competitive, but we do note that the palm oil stock levels at importing countries are not in dire need of replenishment currently. If you look at the numbers up to November, the December numbers are not out yet, but up to November, the stock levels in India, Bangladesh, China, Pakistan are all above historical averages. We also continue to highlight that generally the demand in terms of palm oil still leans toward Indonesia, given that Indonesia's pricing is cheaper, and is reflected in Indonesia's year-to-date October export growth, which is a strong 11.5% versus ours at minus 9.5%. So the bad news is obviously that despite the lower output and the higher exports, the inventory was a 6-year high, hitting past the 3 million ton mark of 3.05 million tons, which is up 7.6% month on month and 78% year on year. So if you look at the stock usage ratio now, it's at a significantly above the 15-year historical average. Stock usage ratio is now at 15.5%. The historical average is 10%. So, however, we do expect that, stock levels should gradually moderate. As mentioned, we are in the low season in terms of output, but again, digesting these high stocks will still take some time. So overall, we are keeping to the neutral sector call, with a target CPO price assumption of 4250 for this year. But that being said, we still continue to highlight the stocks that we have as our top picks. So we still continue to like Johor Plant, SOP, IOI Corp, SDK3 in Malaysia, and then in the regional names that we like, London, Sumatra, and First Resources. So let me stop here, and that's all I have for today. I'll pass you on to the next speaker, Adam. Thank you very much.
Okay, a very good morning. Today I'll be firstly representing Kok Wen for Sunway, and also myself for IGM. So yesterday, Sunway made an 11 billion ringgit offer to buy IGM Corp at an offer price of 3 ringgit 15 cents, which is deemed to be fair as it is a 15% premium to the last closing price. and it implies an FY26 and FY26 PE of 22.8 times and an FY26 price to book value of 1.05 times. We are positive on this move as it will immediately boost Sunway's land bank, unbuilt sales, and also the construction order book, while giving new exposure to new assets such as the Kuantan Port and the various toll road concession highways. So in terms of the details, the offer price of RM3.15 would be satisfied. Firstly, 10% via cash, and the remaining 90% is to be issued via a share swap with Sunway shares that is to be issued at a price of RM5.65. So assuming the full acceptance of the offer, the consideration will comprise RM1.1 billion in cash and an issuance of RM1.8 billion worth of new Sunway shares. So, an EGM will be convened in 2 months to obtain shareholder approval for the acquisition, and the whole exercise is expected to be completed in the 3rd quarter of this year. Given the timeline, IGM shareholders who will receive Sunway shares will not be entitled to the dividend in specie for the listing of Sunway Healthcare Holdings, which is to be sometime in March. So in terms of the potential synergies that Sunway will get, of course, it could help Sunway ramp up its market cap. And, with the combined entity having a market cap of about 48 billion ringgit, the 8th largest market cap, among the stocks listed on Bursa. And, Sunway will then have one less rival in the construction industry, and will definitely be in a stronger position to bid for new jobs. And in addition of owning IGM's land bank, particularly in Johor, which has about 880 acres, which will further Sunway's market position in Iskandar, Malaysia. And not to forget, IGM also has 900 acres of land in Seremban, which would also widen Sunway's presence in this state, given that Sunway is already developing Seremban Central. So all in, for Sunway, it is definitely, a reasonable deal. And moving on to the perspective on an IGM shareholder, the RM3.15 offer price, which implies a 22.8 times FY26 PE, is at a premium to IGM's 5-year historical mean PE of 15.6 times. And while the offer price of RM3.15 was lower than our initial target price of RM3.43, we still view that IGM shareholders should take the opportunity to participate in the potential upside that may arise, if Sunway could maximize or unlock the value of IGM assets, particularly on its land bank. For example, Sunway's land bank has a GDV per acre of about 30 million ringgit as compared to IGM's 13 million ringgit per acre of GDV. So it seems that Sunway does have that potential to really unlock the value of IGM's assets. So with that, we really we recommend IGM shareholders to to participate in the offer. So and the next question is, how would the integration, especially for IGM's construction happen with Sunway's subsidiary Suncon? So if it was to be at a if the acceptance of the takeover offer would be 50% to around 50% plus one IGM share, which is the minimum scenario, it could likely be that Suncon and IGM would continue to operate separately. But on the other hand, on the maximum scenario whereby there will be 100% acceptance, for this offer, then Sunway would definitely carry out some integration of IGM's construction business into Suncon. So, with that in mind, as to how IGM's construction business would fit into Suncon, that would be reliant on the pending transaction of this deal. So yeah, all in, we are positive on the deal from both sides, whether you're a Sunway shareholder or an IGM shareholder. So that's all from me for today, everyone. Thank you for dialing into HGB Morning Kappa at 8. We will see you at the same time and same place tomorrow. Have a great day and take care. Bye-bye.